Hello guys, and I hope that you are all keeping well, and I hope that you're all keeping safe. It's been a while, and I hope I just want to say welcome back to the channel again. As always, I want to take a moment to appreciate everyone that supports Vertex, appreciate everyone that subscribes to us, likes our videos, emails, messages us, letting us know how you're getting on using the free content. Now, this video is actually inspired by a question, not a question, but a suggestion that I got on Instagram the other day about putting timestamps in the videos. Now, as mentioned, I don't actually plan the videos, so I just basically just start recording my screen and start talking about whatever comes out of my mouth, basically. But what I realized is that the free strategy is so scattered on YouTube that it's not in an easy formatted way where you could simply go to a certain video to find exactly what you are looking for. And the main thing is I realized that the free strategy was actually taught in our webinar, and the webinar is an hour long, and I don't blame some of you if you don't want to watch the whole thing. Bear in mind, in that video I was trying to sell you something. So yeah, I mean, I'm not surprised if you didn't want to watch that or not. But to be honest, I mean, every video is basically advertisement for Vertex. However, I still want to make sure that I'm providing you guys enough content and enough value that you can basically use the content that we share for free and just get on with it and be profitable. I mean, the content that we share on YouTube essentially is things that you can easily find online anywhere. And with that being said, it's quite hard to find. So I want to make it to a point. So my videos are essentially hopefully making it easier for you guys to find content that's readily available out there for you. The only difference that you don't get taught essentially is my lower time frame refinement. I know everyone who teaches smart money concepts has their own way of doing it. We have our own 2-rule process way of doing it, and that's the only thing that you don't get to see here on YouTube. That's the only part. As well as that, joining Vertex, you do get access to my support. However, I'll speak about the new initiative at the end of the video. I won't waste too much time. But this video, I'm going to start a series. I don't know what to call it, to be honest. I'll probably think of something for the title. But this series is basically going to break down the strategy into short videos of each component that you need to be aware of, just so you can simply just go back to that video that, wherever you're struggling, you can identify it and just go back to the video. Because I do realize that on our YouTube channel, everything is very scattered, and I do apologize for that. I didn't do that on purpose. As I said, I just not pick up a screen, but I just start a screen recording and just start recording whatever's coming to my mind. So the first thing that I want to talk about is actually identifying what an order block actually is. Now, order blocks, sponsored candles, IPAs, what else do people call it? IFCs, I think, is one. I can't think of anything. I can't think of anything else. Essentially, they're all the same thing. However, the main understanding that I've heard is that an order block is the last up candle before the down move, and an order block is the last down candle before the up move. Okay, that's the most basic way to see it. But if you're going to see it in that way, you're gonna ignore the reasons why. You're gonna ignore why it's an order block. Okay, and what I mean by that is it's not simply, for example, let me try to find a good example for you. It's not simply where can I find it? Is there an example here? There must be. There has to be one. Okay, for example here, you have to understand your structure well to understand what an order block actually is, right? For example, you have a low here, high here, right? And then you have this impulsive down move. For some people, they'll say that this is an order block, and then when they backtest, they'll see, oh, there's a reaction, that was an order block. I mean, for some people, that may be an order block, but you have to ask yourself why. Yeah, okay? For everything that you do for your setup, you have to critique it. And if you can't do that, if you don't have, sometimes you have to throw the ego out the door throw the ego out the window. Yeah, no, I don't think anyone says out the door. I might have just made that up. But essentially, you have to throw that away and think about how can your setup fail. That's the main thing, because you're the best you're the best person to critique your setup. Okay, no one else, right? You can send setups, for example, in the mentorship, people can send setups to me and I can critique it from what I see. However, you still need to be the person to say why won't it work. For me, that's not an order block. Why? Because we've got this low here, got the high here, right? We need to break this low for it to be an order block. Okay, so that won't class as the order block on this time frame. Okay, I'm not looking at anything else. I'm just talking about why that isn't an order block for me. It didn't break structure, right? Some people can say that the structure here, for example, but what created this high? It was from down here. It was whatever it was down here that created the high. So these are all only minor structures. Yes, it broke the minor structure, but is that really significant? For me, no. Okay, although that is an engulfing candle and is an impulsive move, and that impulsive move essentially is an indicator that institutions were active at that point, but you need to have a sound understanding to know, what your order block actually is, and what you need to understand the basis of the theory behind it. If you don't understand that, you will struggle to understand the concept, and you'll struggle to understand which order blocks are you going to use, because there's order blocks everywhere. For example, in this situation here, okay, you have the high, low, and then you had a breaker structure here, right? Where did the break structure actually come from? It came from somewhere. This is a weird situation for me, to be honest. It's not overly clear, but is that the order block? For me, no, because it didn't do anything. Although it was the start of this original move, we formed a base. So in terms of supply and demand, is when you get like a base that's formed, then you get a breaker structure. The price that's forming this base, remember what I said about this consolidation period. When you have that is when there's equilibrium in the market. So you have to understand the buyers and sellers at this point are happy with each other. They essentially, that's the best way to say it. Okay, they're happy. Now, in this situation, what you need to think about is what's being said, what is being shown to you, and this is where the understanding of liquidity comes from. And I'll save that for another video anyway. But you need to understand what is going on here. Generally, when you have a liquidity grab and a push into the break structure, that's where the move came from, not from up there. Okay, so that's essentially what's happened here. Price pushed down, it formed a base, and then it carried on dropping from there. So what actually caused this impulsive move down is from whatever happened in that consolidation phase of that base, which is why because what I've seen, this is based on an example that someone actually sent me, not this specific trade, but in this situation, someone asked me why didn't it react to the order block. The reason why it didn't is because that's not an order block. Okay, you need to ask yourself, when you find your order block, you need to ask yourself, what has it done? What has it done to not call itself, but what has it done for you to call it an order block? How is it an order block? Is there a reason for it to be an order block? Because you have to understand, for an order block to be an order block, right, it needs to break structure. That's the first thing. It needs to break structure. If, for example, it does this and then it breaks, right, okay, the order block's going to be here, not here, because whatever the candle is here that caused the up move, although this is the one where the move actually originated from in the grand scheme of it, where did price actually push up from? Where did that drive come from? It came from the order block that's sitting there. Okay, and that's again the consolidation period that you can see that's forming. That's essentially what happens again and again, right? And that's basically all you need to understand is, when you find an order block, simply ask yourself, is that actually an order block? Okay, now in terms of the order block being the last up move before the down move and the last down move before the up move, yes, that is the case. But obviously, for example, when you find an order block, let me use a random chart that I don't really look at. As you can see, this is my watch list, by the way. I know some of you ask. This is the watch list that I use just to analyze for students, and as you can see, I've not actually done well in organizing it. ignore that. There we go. Let's just go in the first one. Oh, I don't know if I've just missed a great trade or if I just marked this up for someone else. I'm not sure. I don't even trade this pair. Okay, let's look at this. Okay, for example, we have this huge impulsive move, right? Let me get rid of the ranges. Again, we'll speak about that in another video. Okay, we have this huge impulsive move on the daily, right? We have a high, and then we have a low, and then a high, okay? What caused this high? That's what you need to think about. It's from here. Does that order block, now that you've done that, you need to ask yourself, does that order block make sense? And that's why it's good to make use of every time frame that you have to get that multi-time frame confluence. Let's look at the 4 hour in this situation. I don't know who I marked this for, I marked it obviously for someone. Let me get rid of all these for you. There we go. Okay, so in this situation, sorry, where was the order block? Let me mark the daily order block here. Okay, in this situation, yeah, so you can use the last down candle before the up move in this situation. Right, here, now you need to ask yourself, what actually caused the breakout structure? Where does price need to react from? Okay, so this is when some people, now I know I said go for the extremes, but you need to still be reasonable in thinking what the extremes actually, oh no, oh, I don't know what I did there. You need to be reasonable in thinking, what your extreme actually is, and is it the cause that broke structure, right? Because what we can see is, although the low of this is the daily low of that OB, right? And that caused this impulse up. Where did this come from? Okay, it's definitely not from here, because that didn't do anything, because we went up, but caused a pullback, and then we continued going up. Okay, and then we had that big impulsive move which can end up breaking this structure here. So this order block here, well, not order block, but that candle there, it didn't do anything, right? I need to be careful how much I draw actually. Oh, I just got rid of the, that's fine. But we need to think about, does price have a reason to go there? No, because it didn't do anything. Okay, it just caused a move up, and then it came back down, and then broke the actual structure that needs to be broken. This candle did not break structure. So in terms of marking out a point of interest, which is essentially is your OB, it's going to be this one, and it makes complete sense why price reacted off that. So some people would mark out the most extreme one, which is probably down here. And yes, there's a little bit, is there a little bit? I mean, yeah, so there's slight imbalance sitting there, and that will probably give some people a reason why they should take that trade, okay? And fair play if you spot the imbalance, because that is, as you can see, that little gap there now, that's the imbalance, right? Even if it's less than a pip, it's still imbalance that you need to think about. However, it's got no reason to go there, so you don't even need to think about that one. So you need to ask yourself, where does price need to go? What drove the price to cause the break of structure? That is your order block that is sitting there. That's where price needs to come from. That's where price needs to come to mitigate, because you need to understand that the order blocks are essentially the last place that, in this situation, the order blocks are the last place that banks have sold, or not banks, but institutions, I'll say. Institutions have sold before they push price up. So they need to grab enough liquidity. So they potentially grab liquidity here, because as you can see, I mean, this is the 4 hour, right? We have this relative base that's formed here, okay? That's probably a support level on a lower time frame, like the 15-minute or so on. Okay, then price broke down, and then it continued up. So institutions were possibly active at this point, because given the fact how much imbalance was actually here on this candle, which is here, right? We know that as retail traders, we can't do that. None of us can produce this move. Only institutions can. But if you think about it in this sense, that imbalance has already been covered now. Okay, that imbalance has already been covered, but they pulled it back one more time before they continued. And this is the whole idea of creating a story, because you need to understand, does price actually have a reason to come here? Okay, because they sold to come down to this price, right? And we can see that it's quite clear from that footprint of the imbalance and this very impulsive candle, right? So that's the first footprint. But where was the last place they were selling for before that up move actually happened? It was here, and there's clear imbalance. Okay, which gives you a reason. That imbalance is slightly exaggerated, but it gives us a reason to make this our POI in this situation. And all this was based off the higher time frame, which allows us to essentially have a bigger trade than than your lower time frame plays. I mean, you could for whatever time frame you're using is the exact same thing. You're following the same principle. You're trying to understand where was price pushed to, and then what caused that impulsive move, what caused the break of structure, why is it an order block? That's essentially what you need to ask yourself. And bear in mind, you need to understand if you're counter trend or pro trend, because remember, in terms of liquidity, right, if you're in an uptrend like this and then you get a break of structure, right, you're probably thinking, yes, that's an order block that is sitting here. Essentially, that can just be a liquidity grab. So you need to be aware of whether this is an actual order block or not. Yes, it'd be an order block, and order blocks need to be either violated or respected, either one of those. Okay, so in this situation, obviously, if it carries on up, then that's been violated, which is why you need to be cautious of how you play your order blocks. Whether you're going to go with the trend, you could take it with a lot more confidence, whereas if you're going to take it against the trend, you need to be wary about what you do when you go to refine your trade. Okay, so just bear that in mind. Bear in mind the overall trend in that situation. So the main thing from this video that I want you guys to take away is just go back, look at certain moves, and ask yourself, is that an order block? For example, even here, I mean, we can see it here. So we have this high, low. Okay, in this situation, ignore the fact that that's the range high and the range low is there on this 4 hour time frame, right? Ignore that for a moment. Let's think about this situation from here to here. Okay, now we have this very big impulsive move. Does that mean that's an order block? And this is what some people are doing. And just because it reacts here, right, people think, oh, they just missed the move. It's not an order block. It didn't do anything, right? And in this situation where we broke, just ignore the fact that we're bullish in this situation. Let's just try and understand. Let's see this bearish move, right? Even though price is bullish, but does price need to react here? It can do, but you still need to understand what is a liquidity grab and where does price need to come from. Because even when price is at an equilibrium like this, right, there's interaction between buyers and sellers, right? So you will have order blocks at each range regardless of what time frame you are doing. Okay, and it depends on how price actually reacts, because these will be reacting to past order blocks. Okay, and essentially that's how you can buy and sell the same pair, but that's a little bit more advanced to take on, because there are order blocks, they're everywhere. Okay, that's the main thing you need to understand. The main thing that I'm trying to say is you need to make sure that a setup makes sense. For example, if I was to see this impulsive move, it wouldn't make sense for me to take a trade from here. Okay, people can say that this is a structure. Yes, I mean, it's a minor structure break. Okay, that's a minor structure, and it did break that minor structure, yes, in that sense. But is there any relevance to that move? No. Okay, because you have to bear in mind how the market moves is when price is doing all this, essentially, as I said, this is when there's an equilibrium in the market. The buyers and sellers are both happy. When there's a search of higher or lower prices, like this, okay, that's the only time where you need to start looking for the order block. That's the only time where you need to start looking, where do you want to buy from and where do you want to sell from. So in this situation, yes, it sort of has accumulated a little bit, but is there any cause to go higher? No, because in the range that you're in this range from here. Oh, I didn't know I clicked that one actually. Sorry. And the range that you're in here, this is all minor structures, so it's not relevant until we break either one of this range. Unless you go on a lower time frame, you can probably find a lower time frame play and buy and sell from, buy from here, sell from there, and so on until you reach your POI. That's completely up to you how you want to do it, as long as you can understand the concept where you find your setup and simply just question yourself, what is wrong with the setup? Just ask yourself, what can go wrong? Why would it be wrong? And if you can't find anything to fault it, then it should give you a bit more confidence behind the trade, because you need to find your own faults. Okay, no one's going to find that for you. Even when you join our mentorship, you know, although I can correct you when you send in charts, for example, but at the end of the day, you need to be able to recognize it, because I won't be with you 100% of the time. I mean, you can send a message anytime, but I mean, I won't be with you there. I won't take the trade for you. You have to do that yourself. Okay, the accountability is yours. So you need to be able to critique yourself in this situation. And sometimes, you know, if someone gives you critique, you have to be able to take it, because, and if you can't, then you don't have an open mind, and you'll struggle to find your faults and struggle to progress. So just bear that in mind. So next time you find your setup, just ask yourself, how can it go wrong? Where can it go wrong? And what would make the setup incorrect? And if you can't find anything, then go ahead with the setup. So in terms of this video, for the order blocks, you need to ask yourself, is the order block an actual order block, or is it not? Is it just a false move? Is it just a move like this? Is it a move on minor structure, or is it a move on major structure? If you can understand that, then you know whether you're going to go for temporary plays or long-term plays. Anything inside here is going to be temporary, right? Because you can buy and sell here wherever, right? But if you're going to go from the bigger ranges, you need to understand that you can hold these trades for a bit longer. They're not slightly, but they're less stressful than the lower time frame plays. But that's completely dependent on you and how you want to be as a trader. Now, I'm going to end the video here, and I hope that this has been helpful, and this is going to be the start of the new series. So I'm going to break down the free strategy into short videos for you guys. So instead of having timestamps for the video, each video will have its own topic, and I'll try not to talk about too much in terms of other things if I've picked a topic. So for this video, it was about order blocks and asking yourself, is an order block an actual order block? Just ask yourself that and see if you can critique the setup using what you've learned from this video. Now, again, I just want to mention, I don't know if any of you watched the video released yesterday. Vertex have actually released a course program, and I'll put the link in the description below. And essentially is some people who are using our free content just want to use the course and get on with it, and that's perfectly fine, because the main fee actually goes for the mentorship time. So what we're actually charging for is basically you get access to the course, Discord as well. The course Discord has its own separate Discord, completely separate to the mentorship one. It has a community chat. It has our trade breakdowns. We also send in whatever the mentors are looking at that given time, and you get access to our course for the fee of 60. I think it comes up to £69. It's $97, whatever that is in pounds, monthly. And you're not obliged to stay. If you don't like it for the first month, then you can leave. It's completely up to you. But we just want to make our course more available for the majority of you, because we realized that there are a lot of resellers selling our course for $150 and plus, and you know, some people aren't even getting the course. So what we thought is just offer you guys the course where you could buy it straight from the source. You could buy it straight from us, and just have access to the course. But again, if you want to join the mentorship, visit the website. Our bootcamp is on Saturday, so today and tomorrow you have 2 days left to enroll for the bootcamp. And if you use the code YT500, YT500 at the discount for the bootcamp. I don't know why that's so small. There we go. If you use the code YT500 for the bootcamp, you would get £500 off the fee, and you'll have access to the mentorship discount. No, not discount. You'll have access to the mentorship Discord, as well as the live trading that we'll do over the weekend. I hope to see you guys there, but if not, feel free to join the course using the launch pass link. But for now, I'll leave you guys be, and I'll see you guys in the next video.